Welcome back to your monthly precious metals projections brought to you by SprotMoney.com. I'm your host, Craig Hemke. It is March 2022, and joining us for this month's call is Chris Vermeulen of the Technical Traders. Chris, good to see you.
Yeah, thanks for having me, Craig.
It's always fun, my friend. Hey, look, before we get started, I want to kind of put out my personal plea to everyone, really, but primarily to citizens of Canada after the month you've been through. Okay. Like on my site at TF Metals Report, we've talked about the war on cash for years and how if you just hold things in the bank, it's all digitized and it can be taken away from you in an instant. And all of you in Canada just got a firsthand lesson in that. You might have thought that was crazy talk, right? But if you spoke out and held an opinion that your government didn't like, you were frozen out of your accounts. So forever, we've talked about holding physical metal in your own two hands, gold and silver, as protection from a lot of things, but also wealth protection, your own sovereign wealth. All right, listen, Sprott Money should be your go-to source for that physical metal right there in Canada. They're based in Toronto, founded and run by Eric Sprott and his family. This is where you should go, anywhere in the world where you're listening to us, but particularly you Canadian citizens. Like I said, you just got a lesson in how this might work going forward. And if you don't think this could happen to you anywhere else on planet Earth, I'm afraid you've got your head in the sand. So SprotMoney.com is where you need to head right now. Check out the deals. There's always all kinds of good deals. They will store it for you too if you don't want to store it yourself. But man, they'll just ship it right out to you. Whether you want coins, bars, maples, generic rounds, whatever, they've got it. So go to SprotMoney.com, 888-861-0775. Start your own physical stack. Or if you're like me and you look at your stack, if you have to ask yourself, do I have enough? I mean, you probably don't have enough. So you can add to your stack as well. All right. Anyway, that's my personal plea here this month. Chris, it is a crazy time to be alive. A month ago when we met like this, we talked about how commodities were on the verge of breaking out, and we could never, though, have foreseen not only the geopolitical events, but also just the insane moves. I mean, crude oil is over 110. The base metals are up 4 or 5% every day. Wheat this week has been limit up every single day, and now is at all-time highs. Copper breaking out to new all-time highs. Let's start with commodities in general, because I know you've got some thoughts on commodities, but also seasonality. What can you tell us?
Sure. Yeah. Well, let's just start off with some really basic market analysis in terms of what the stock market does during different cycles throughout the cycle, what sectors come to life. And this blue cycle here is the stock market cycle. The yellow cycle is the economic cycle. And how it works is generally the stock market moves and changes before the economy. Money tends to front run what they see coming. So the stock market will bottom and start to move up while the economy and everyone is still very bearish and scared. And same with the tops. The stock market will start to sell off before the economy actually gets really weak. So everybody right now is seeing the stock market fall, and really businesses are still booming. I mean, you can't get labor if you tried. Everybody's doing exceptionally well when it comes to businesses, and the stock market's moving down. And what's interesting is we're in this phase now where we're in a commodity rich environment. You and I have talked about this many times, but the topping phase of the stock market, typically stocks are going to start to top out, become volatile. And what becomes the market leaders are commodities, energy, precious metals being the two main ones. And as you just talked about, we are in that feeding frenzy with commodities, and we're seeing them rally across the board. So knowing that, the stock market is kind of on its last legs from what it looks like, and commodities are coming to life. I mean, we can look at these markets. And what's pretty interesting is if we go back in time here and take a look at the SP 500 weekly chart at the top, this was the 2007 market high. And what happened when the stock market got into this topping phase? Well, we saw commodities put in a huge rally. This is the crude oil ETF down below. Crude shot higher, and commodities in general, the commodity basket index moved up as well. And that's what happens. We see stocks start to trade sideways. I feel as though we are somewhere in this kind of area with the stock market right now. And we are in this full on, bubble bull mode in commodities with everything that's unfolding. And if we fast forward to where we are today, we're kind of in that same scenario. Now, this ETF loses value over time. So if I was to just zoom in a bit, it kind of got crushed with the COVID oil price. But the reality is the crude oil ETF is up huge. It's up 354%, a little bit skewed simply because of that negative rate that we had. But we've got hundreds of percentage gain in crude oil. The stock market is now just getting into what I think is a topping phase. It's starting to get very exhausted. And really, when we look at the other basket of commodities like DBC, we look at the overall commodity index as a whole, and we zoom way out here. Last time you and I talked, we talked about this kind of line in the sand that we are like right back in here. This is kind of a weekly chart. Got this really critical pivot area. If I can get a line on here, where we've got support, resistance, a lot of volume through here. And we kind of creeped up to this level, and the market was either going to get rejected in a big way, or it was going to bust through it and take off, especially if we have war. And that is exactly what's happened. So now we're in this like huge, this big phase here moving up, news driven, but we're already in a commodity rich environment. So everything is firing on all cylinders when it comes to the commodity space. So that kind of gives you the overall view of where I think we are. Stock market is on its kind of last legs. Commodities are doing really well. Energies are doing well. I think one of the last movers, which I find is almost always the case, precious metals and miners around precious metals are the last ones to move and do really well. You and I talked about this last month, and they're just, I think, getting started, which is pretty exciting.
And you look at that chart, again, now that it's above whatever that is, there's 26 level, 25.
Yeah.
I mean, what's that peak back there in 2011? That's up 32 or so? No, the next one down.
Yeah. Sorry. Yeah. 32. Yeah.
So that would imply, I mean, there's at least another 10, 20% there that thing could move before it would run into that level. And then, oh gosh, above there.
Yeah.
It's interesting, again, because so much of this is geopolitically related. And we also know that, most moves on geopolitics don't stick. But this is different. And I if you could pull up, Chris, that ETF of the grains, remember looking at that one last month?
DBA, which is the agricultural. This is,
yes. All right. So let's talk about that one for a second, because this ties back into the metals. The Fed is out there claiming that they're going to start hiking the Fed funds rate by 25 basis points a month, as if, one, if they get tightened too much, that's not just going to lead to another pivot, because they'll tighten liquidity and drain liquidity and everything will start to collapse. But two, what the hell good is 25 basis points going to do when you're seeing this kind of base commodity inflation? I mean, energy goes into everything, right? So there's an input cost. All the base metals, copper, close to all-time highs. But let's talk about, I want everybody to see this just from a food standpoint. I mentioned wheat's gone up limit every single day. It's up to $12.50 a bushel. I mean, that's way past its old all-time highs. Corn is making new all-time highs.
Here's the wheat.
Soybeans very close to new all-time highs.
Look at the wheat. Look at the wheat ETF. This is the wheat ETF.
Oh, look at that. Okay, so here we are in a period where all of these grain inputs, you think, I can afford change the price of a loaf of bread. But corn not only is a livestock feed, think of how much high fructose corn syrup's in everything, right? Soybeans, a protein for everybody globally. All right. So your food costs as we go through this year, those have to be passed on to you. And so your food inflation is going to soar. So this idea that the Fed is somehow going to hike rates above the inflation rate and drive real rates positive, it's just not going to happen. And so we'll get back to that in a second, what that means for gold and silver too. But that chart, to show everybody where that is historically, again, it's an ETF, so it gets wasted away over time. But historically, you can see where there's a suggestion it could still go higher. And you look at these things as we head into the summertime. We just got news today, the Russians may be suspending fertilizer imports or exports. How many farmers in the U.S. Midwest are going to switch from corn to soybeans because it's so expensive with anhydrous ammonia and potash and everything else to plant corn. So what's that going to do when yields fall? Anyway,
it's scary, the inflation that I think is still possibly ahead. I mean,
right.
Just think if people
that was my inflation speech of the day, Chris.
Exactly. I mean, just think if people can't get fertilizer, I mean, the crops are going to be half of what they normally are. Fertilizer is like critical. So that's going to even add more fuel to the fire. I mean, we're starting what I think is a major commodity super cycle. I think near term, I think we're hitting kind of a little bit of a bubble news driven phase. Yeah. But I do think we're going to see precious metals and commodities do very well for 3, 4, 5 years going forward. And it's scary because you look at the side supply demand issue. You look at Ukraine is like the 4th largest resource provider for iron ore and corn and wheat and all kinds of stuff. Yep. And I mean, obviously, they're not going to be able to farm if they're under attack. That is going to put a huge strain on the system. Fertilizer is going to cut back on crop yields on top of that. I mean, it's the perfect storm for commodities. Right. And it might be here to stay for a few more years than we actually want.
Right. And if you look horizontally at that chart, like we did the last one, what is that to begin to target? 30, maybe next?
Yeah.
Okay. We're at 22. So what's that? 40%?
Yeah.
30 some odd percent?
Yeah. And it can do that really quickly too. I mean, really, that's just, this is a quarterly chart. So this is over a few months. It could very quickly pop up there going forward.
So heads up, everybody. Mm-hmm. This is the real world stuff we're talking about. Okay. So Chris, you mentioned it and you're right. I mean, a lot of this eventually trickles down to gold and silver. And then, in the mining sector, it's like the producers take off first. The GDX leads the GDXJ, which often leads the SILG. If you would pull up a chart, it's March 4th as we record this. So we're still early in March. We are a good 4 weeks away from the end of March and the end of the first quarter. But a lot of folks like to look at the quarterly chart to see kind of long-term trends and take out a lot of the daily noise. Are you in this kind of secular bull market and where are we? So Chris, there you have it. There's a quarterly chart. Again, we're 4 weeks away. Anything can happen in the next 4 weeks.
Yeah.
But tell people what you see there, please.
Yeah. I mean, the quarterly chart really does clean everything up. It takes a lot of the noise out of the monthly, of the weekly. You really see where the body and the overall trends are. And obviously we're in a very strong uptrend. We've had this kind of hiccup here, this kind of test of a break to new highs. And as you and I were talking, you were mentioning, really the quarterly chart, we are 4 weeks away, but we are at a level that's never been reached before on a quarterly basis, or we're holding at that level. If we can hold at this level, that will be a quarterly breakout, and quarterly charts are pretty strong. I mean, that leads to usually a year or 2 year or longer rally. And I mean, that would take us up to 2,600 and beyond for gold based on this quarterly pattern. So, I mean, we're in pretty exciting territory in terms of the precious metals market coming to life. And this is what I find really exciting is a lot of other commodities have been doing well. Oil's been doing well. And now we're starting to see the gold and silver miners just starting to turn up and make a series of higher highs and higher lows where everything else has already done that. And everything to me feels like it's starting to get a little overextended. You look at copper stocks, you look at base metal miners. I mean, they've all had very big runs and they're actually hitting major resistance levels. And so that money is eventually going to flow out of those miners, copper miners and base metals. And those people are going to want to go into where the next good miner play is, and that is going to be precious metals. So I think they're about to kick into high gear and lead this charge.
And buddy, I remember talking either last month or the month before that as painful as it's been for the last 18 months to watch this consolidation, the upside is that now it's pretty clear what the levels are. Yeah. So, for breakouts and if we want the generalists, the kind of macro asset manager, stuff like that to get to start noticing that quarterly chart will get their attention. If you could break that down, can you punch the weekly as well? Because, I mean, we talk about levels you want to break out and all that stuff. As you know, gold's been flagging and you can see that flag. That looks like a breakout too. On the weekly chart, what are we going to watch here?
Yeah, the weekly chart's great. We've broken two previous standout highs, so this was a nice standout high. We've blasted through this one here
Little double bottom too.
so far, and
Back
now
in
we're testing this next level right across these highs, these spike highs. This is a really critical level. This to me, if we break this level, you and I talked about these. You can see them a lot better actually on the daily chart. Kind of just shows these spikes a little bit more. If we zoom back here, you can see these very clear spikes, which go right through the middle of this coil, this built up energy, right? And so we're right now at that level. If we break this, we could see gold in only a couple days pop right up to these highs around 2085. There's a lot of energy built here that if this level is broken, which is right around 1966, 1970, somewhere right there, we could see a very strong pop and expansion move in precious metals. And I think that would be the spark that is going to trigger, I think, gold miners to really become leaders, because now we're going to be, right up to all-time highs in gold, potentially in only a few days or a couple of weeks. And money is going to very quickly want to get back on the gold train, precious metal miners, because there's ridiculous upside potential in those when they start. So
starts pricing with a 2 at the front.
No
but, and Chris, we do a lot of technical analysis, and I know some people think, it's just voodoo and hocus pocus and, crowd analysis and things like that. And sometimes it's more clear using hindsight, as we try to extrapolate and look forward. But look at that chart. I mean, all through last summer, we were talking about putting in a bottom, and all these people were talking, oh no, the Fed's going to hike and it's all transitory and all that kind of stuff. And gold's going to go to 1400. Look at the double bottom at 1680 in April and March. That washout in August came right back down to 1680. That was all then part of a double bottom there at 1720 in September. And you see those two.
Yeah.
And now we're turning up in this clear kind of bull break out of the bull, the bull flag. And now there's a big new cup and handle that are forming. Mm-hmm. I mean, people are going to look back, 6 months from now and go, wow, we sure should have seen that coming.
Yeah. Yeah. A lot of people, I was actually talking to quite a few people over the last couple of days, and how so many people are fundamental driven and they don't know technicals. And It was interesting. I talked to quite a few people that are just fundamental and they don't get the technical side, and a lot of people don't think it's, it's real. It can be voodoo to a lot of people, but if you're a pretty active trader and you've got the charting platforms, you can see the market depth of where all the orders and the volume levels are sitting. You can physically see that it is a technical market. I could look at a previous high and be like, okay, wow, there's a lot of overhead resistance at that level. If it breaks it, or it's going to find resistance there, but if it breaks it, usually the energy it has to break it continues to the upside and you get a big move. So you can see these technical levels if you break down the data. The charts, I'm very visual. It's super easy to show it on the charts, but if you wanted to look at the level 2, look at the time and sales windows and see what's actually happening at these critical levels, they are acting as support and resistance. So technical is it's legit. It's very, very powerful for identifying turning points. But it doesn't matter if you're technical or a fundamental trader. The real money is made in managing positions, knowing how to manage your risk, when to take partial profits, where to put targets in. And unfortunately, a good part of that, you kind of almost, in my opinion, need technical analysis to know where you should be taking targets, and where you should be putting your protective stops so you don't get shaken out too early or it's not too far down.
Right.
So there's a fine line there.
Yeah. Got to follow that trader golden rule. You can't be afraid to let your profits run, cut your losses short. Too many people cut their profits short, let their losses run, and get emotional.
It's easy to do. It's the way the human brain works. Nobody wants to take a loss, but they want to lock in profits because they're scared of losing it. It's like, it's painful.
All right. Hey, one more chart before we go. Can you pull up a silver chart? We talk about, all these commodities and the base metals, and copper is going to a new all-time high as we speak. And yet here's silver just kind of doing its thing, just finally back above its 200-day. It would seem to me it's important above 25 because that's kind of been the midpoint of the range between 22 and 28 over the last year and a half. As you look, if you dial in on maybe a daily chart, Chris, as we go through next week and the rest of the month, what do you want to watch as silver tries to recover and maybe eventually break out above 28? Are there some levels that you'll be saying, okay, now we're making some progress?
Yeah, this level right here around 25.50 is pretty
Yep.
important for a couple of simple rules. I use kind of a rule of kind of momentum of previous highs. So I like to see two previous standout highs. This high clearly stands out among other highs.
Yep.
So does this one. And so I always want to see an impulse move, which is a very strong push that can bust through two resistance levels, one and then two. And so silver has done that. The last time you and I spoke, I mean, we were
Yeah.
way down over here. I'm like, there's a
Yep.
lot of work to be done for silver. This is the threshold, and here we are a month later, busting through that threshold as of today. It's a Friday, so this will be a weekly close. If we can close up near these highs, that's going to be a pretty strong signal for position traders, longer term traders, because
Yep.
a weekly chart's very powerful. But if we break this, typically the way I look at it is the depth of this pattern is usually a good indicator of how much power there's going to be going to the upside. And you could look at this as a W or a double bottom
Mhm.
formation. And usually you take the lows to the high, and you can just move that to the upside. The upside potential is somewhere, up here around 29.50. Now, the way I like to look at it is if there's a major standout high below that, I'll usually always opt in for
Yeah.
a target area down here. I won't try and stretch it beyond the norm. So, we are looking somewhere around 28 all the way up to 28.90, somewhere in there. As if this breakout holds, this thing could fly up here in a week or two. I mean, we're in
Yeah.
that type of environment now where precious metals, commodities are all over the place. They're having huge moves. A lot of it's news driven. So big gains can be taken back very quickly. And we're still in just look at this chart. It is choppy. It's noisy. If you make really quick money on a trade and it gets to a resistance area, I mean, there's no harm in locking in some gains, because it could be pulled right back down into this range and trade sideways for all we know, several more quarters, right?
Right.
And
Right.
when it breaks out of all these highs, that's when you want to be back long. It's fine to pay a bit higher pricing when it's breaking out and starting a major trend like this, because it's going to have a multi-month run or potentially,
Right.
a year-long run.
Yep.
But really, we are in this giant range that is very gnarly, can do a lot of damage. If you get to the upper end, taking some partial gains is great. If we bust to the upside with really strong candles, you can always jump back in, get in for your investment position, because this is an investing trend here that should last months, quarters, potentially even longer.
And that's a bull flag too. Pull that out on the weekly chart.
Yeah.
You got the big sideways for 6 or 7 years coming out of 2013.
Oh yeah.
And Chris, this as well as I do. Silver is that classic, does nothing for years. And then all of a sudden you get all those years gains in like 3 weeks.
Yeah. The quarterly
that's
chart.
what happened
The quarterly
summer
chart shows
2020.
it. It's like, it's kind of, meandering around and then pop.
Yeah. I mean, look at that in 1980. Look at that again in 2011. It went from 18 to 48 in a period of 8 months?
Yeah,
or even
wild.
in 2020, it went from 18 to 29 in 3 weeks. So if you're a trader, if you're interested in buying some whatever, you need to be watching here, because we start breaking out of that flag and trading with a 3. We could start tagging on some big numbers pretty quick.
Yeah. And, I've been excited about precious metals for years, and I've been stacking it, every year I build on my stack. But finally, here we are, 8+ years later, finally, we're in that phase where the environment is primed for this type of commodity play, for this type of investment to go up. I mean, to me, this is the prime time, the perfect environment for precious metals specifically. Commodities are doing well as a whole, but I mean, really, this is the most I've been excited about precious metals in years.
Yeah.
So I'm pretty excited about it.
Yeah, we might be very close to a very fun time.
Mm-hmm.
So we'll see where we are next month. Chris, before we go, you mentioned if you're trying to trade and stuff, the key is to have strategy. You have somebody, looking over your shoulder telling you, okay, but watch this level, watch that level. That's a lot of what you do at the technicaltraders.com. Tell everybody about it.
Sure. Yeah. At the Technical Traders, I go over the charts just like you and I are. I do that every morning for about an 8 to 10 minute video, cover all the key asset classes, what's happening today, what happened to an overnight trading, what we're going to be doing today, what to look for. So I kind of teach technical analysis every morning as we walk through the markets live. And then when I have a trade, I'll put it on, I'll share the trade with everybody else through my trade alerts. And yeah, you pretty much learn and earn at the same time. And when I cover precious metals, miners, you name it, miners have just come to the top of our best performing asset list. We're just waiting for the final trigger to get long, and they're on the cusp of becoming probably one of the best sectors that and could have a 50, 60% gain on the ETF, which means hundreds of percent in individual stocks. So we cover all this, and it's very educational, and it's a great way to follow the markets and learn at the same time.
No doubt. And I should remind everybody, you and I met because Eric Sprott told me you were his favorite. So you got that going for you.
All right.
He thinks you're awesome. And I know he still does. So anyway, just a big thumbs up from Eric on what you do too.
Yeah. Appreciate it.
Hey, before we go, again, just a reminder, there it is, Sprott Money. Physical metal. You must have at least some, especially just in this environment. I mean, you might need just a barter for stuff at some point. So Sprott Money should be your go-to source. And if anything, just remember that they sponsor all this stuff. If you get quality information, feel like you're well served by either this podcast or Ask the Expert, the monthly wrap up, or any of the stuff that we do, at least thank Sprott Money by giving them a like, maybe subscribe to whatever channel you're watching this stuff on, sign up for their newsletter right there on the sprottmoney.com site, because they will then notify you every single time there's new content like this. So at least you can thank them that way. And of course, if you want some metal and you want to talk to just an actual person, get that all taken care of, find out what your options are, even in an IRA. What do you call those IRAs up there in Canada?
RSP, registered savings account. Savings plan.
Can't just call it an IRA. That'd be too simple. Anyway, it's tax season too. The number for Sprott Money, 888-861-0775. Again, Chris Vermeulen of the Technical Traders. Thank you, my friend. I can't wait to see where we are in April.
No kidding. Yeah, we'll see you in 4 weeks. All right, Take care.
All right, from all of us here at Sprott Money News at sprottmoney.com. Thanks for watching. We'll see you again next month.